Hey guys, today is Sunday, July the 25th of 2021, and I wanted to go over gold futures using double again, price and time, technical analysis. So let's get into it. As you can see right here, we had unemployment on the 22nd and got this nice little pop, kind of consolidating still, pushing a little lower, but so far, hanging in there. Looking at the RSI, it's at 44. I'm going to start out with the bearish view of what my indicators are showing. Let's start with the spectrum analysis analyzer. You can see that this cycle is pointing lower, shorter time frame, all the way into like the second week of August. If you do a composite of those four actually, you get this possible projection line for gold down into August 10-ish. Doesn't have to be exact date, but rounding it off around there, and then up. That's the bearish view. Another bearish view I have here is self-similarity. It's indicating maybe all possible all the way into September. That remains to be seen on the self-similarity of price action of 2013 and this price action of 2021. The algorithm is picking that up as a possible pattern that could play out. Other than that, I think those are the only models I have that are very, very bearish. We'll go now into the positive. We'll start off with the solar annual projection line. You can see that there's a dip, and coming into FOMC, somewhere around there that week, it's showing possible higher price action. This one pushes all the way to September, which is the opposite of the self one I showed you earlier. Neural net, which is the computer. Actually, you know what? Let me see if I could take this RSI out. Just wanted to show you what the RSI was at. Neural net, which is a computer, is showing a possible turning point on the 29th. So it's all clustering around here, around FOMC. Then another possible turning point around October. Turbo cycle is bullish, indicating a possible low of the week of FOMC, and then projecting up into August, maybe like the third week of August. The self-similarity algorithm, this one is similar month of July. This is what the price action is indicating, and so far it nailed it really good here. It's pointing lower here, 23rd, and now it's showing price action going up into like the first week of August, maybe second, and then pull back down. So that's what it's showing as a pattern, picking it up from 2006. The closest that it would fit. This one is a similar year, and it's picking it up from 2015. So it's showing down and then kind of consolidating till August 3rd, and then up, which lines up with a lot of the annual, solar annual of prices going up, turbo, and so forth. And then the last one I showed you at the beginning of the video, this is the one that's kind of bearish. Market profile, you can see that where the big gaps are, that's going to be your support. So there's a big gap between 1788 and 1783. There's a lot of price action here, and then another big gap, 1760 1756. But closer to what price action is 1789, 1783. Big gap there. So we'll see, maybe that will hold. This is the Bradley model. You can see that this one kind of worked out really good. 1712. We got this peak up here. It was a little off. 1712 was here, and the high was 15, a couple of days off. This doesn't necessarily mean that price action is going down, but could be. I kind of look at it as turning points. As you can see right here, this one kind of worked out. Price going up, then a turning point here. It came a little later. The high was on the first, and it kind of consolidated here, all the way here, and then here just flushed down. So this is far into the future, August 18. Looking at the seasonals, let's clear it up a little bit. You can see that the 20-year, which is this one, is bearish. And then on the week of FOMC, it goes up. This little line right here. It goes up. If you do the 10-year that Gann taught, it's going up already. I wanted to just show you the bearish one in there. This is the decimal. Is going up. The blue one, annual, is going up. The fast in the mid. So all the seasonals are pointing for higher price action. And towards the end of the month and the beginning of the month of August. And then it kind of tops out somewhere in the middle. Now for the more interesting stuff here. Warrior is showing the same thing from different pivot points. It's agreeing. So this is pushing it into the first week of August and going higher. You can see the pattern, besides the bearish view I showed you earlier. There's a majority of them just showing that it could go a little lower and then it'll pop. This one, Warrior analysis, showing a little sideways, and then somewhere around there, FOMC and all that, it pops. Gann square, using the overlay of 1.6, you can see that we failed right here, or we're just kind of battling it here. We could get a little closer if I can. Let's see. This is an important level. We flushed down, and we got right back above it, this angle. So this is, and then you got one time pivot right here, which coincides or close to the FOMC. So we'll see if a change of pattern would happen there. That's the Gann square. Fibonacci levels, you can see that we failed at 38.2. If we go all the way down using fib levels, 23.6, 1765. Could be a point of support. If you want, we could put this market profile here. As you can see some of the key levels while I'm showing this indicators. You see, this is where that big gap is right here. The monthly bar is looking good. It's green, so that's good. On the weekly bars, you can see that we had the last 3 weeks were really good, and then this past week is negative. We got a little bearish price action for the week. The harmonics, you can see that everything is lining up right here as a cluster for the FOMC. And the saw, it pushes a little bit over here to the first week, August 3rd. Everything here with harmonics from different points, different pivot points. Advanced support and resistance lines, you can see that we hit 1831, we failed 1816. Using this System 1747. If it ever pushes down there, if it gets really bearish this week, that could be a possible support, which kind of lines up with the market profile. There's like these big gaps. I'll leave those there, maybe just take them out just to make the screen more visible. Pitchfork, you can see that right here, we hit this angle and we failed with a lot of resistance there. Pitchfork from the bottom up, we're trying to regain that angle. What's interesting is that if you wanted to, you could I just picked this pivot swing low, but I could always move it here. And this, if I move it to this swing low here, you get a little wiggle room and a little space, I guess grace if you want to call it. So it's still in the channel if you want to pivot from here. It all depends where you want to pivot. I decided to pivot here, and it's battling here, so we'll leave it there. I know it's still good if I put it on this swing pivot. And channels, you can see that this is going to be a strong angle of support. If we were to get there, put all these channels in there, and you can see that there is a resistance here too with the pitchfork. Parallel lines, nothing really there. I think that's pretty much it. I showed everything else. So to conclude this video, I don't want to make it too long like the other one. I am seeing, price action is king, like you always know. I'm seeing like a dip, and either maybe before FOMC or chances after, if price action is going to follow all the seasonals and everything and all the stuff that I've been showing that possibly could pan out, that it's going to go higher. It probably would be like right after FOMC. Right after FOMC, price action just continued to tank, and I don't see anything of a momentum to the upside. Then none of these panned out, and it's probably going to follow the bearish view that I showed you earlier in the video. But if price action, starts getting a heads up into FOMC and then pushes down, but then starting August it starts going back up, or right after FOMC it starts going back up, then that's when I'm gonna put in a long position and just ride that wave until it stalls out into August, or maybe even to September. I also wanted to cover market profile levels. As you can see, we're still in the cloud on the weekly. A lot of chop fest on the daily. You see over here last week, the volume was negative and just chopping around. Still in the MOBO. You get that value area low and support right here, 1769. Point of control for the last year, 1878. And if you go into the daily, we could blow this up. You see that the cloud is still negative, kind of expanding. We just came out of the cloud, so now it's bearish. The point of control is at 1782, value area low 1761. It's a little getting weaker. So FOMC coming up this week. If we could hold 1782, or if it gets really wild, since the price action is still on the weekly, and we hit 1760 into FOMC, after FOMC, and price action starts going up, I think I'm going to go for the long there and see what happens. So that's my view. That's my game plan with all the stuff I showed you. Somebody requested an update, so that's where we at right now. And let's see how this week plays out. Very important week, FOMC. And then in the week of August, we'll revisit and see where we at, what price action is doing. Hopefully you like this video. I'll keep you posted on my thoughts on gold futures using double again price and time technical analysis.